Well, good morning, Southern Oregon. Welcome to the Real Estate Show. Pete Belcastro, Alice Lema. We are your hosts here today, and we're both brokers at John L. Scott in Southern Oregon, and we're here to talk about the ever-changing housing market in Southern Oregon. Pete, what did you discover this week?
Well, I discovered that, the demand for housing is not going away in any way, shape, or form for buyers, sellers, or renters, investors. It is there, and it is high demand, low inventory, Alice, as we've been talking about now for some time. Inventory levels, again, on just frame-built homes, around 250. So we're up a little bit by about 30 from last week in Jackson County, despite
And
70,
I showed all of them.
yeah. Besides 79 new pending sales that took place last week as well. But Josephine and Klamath counties, still both counties only have about 100 listings on the market in frame-built homes in the entire counties. So the shortage there is bringing lots of new issues for how you buy a place now and how you sell them, especially how you buy them in terms of how are we prepared, because you're going up against multiple offers now in really all the price ranges. Not just 300,000 now, it's 400,000 and 500,000 that this is happening. So how we prepare is a good reason. You got to have a good lender. So today we're going to talk with Guy Giles from Mutual of Omaha Mortgage, who joins us once a month here to talk about that. What are rates doing? I've heard they've gone up. Have they? I'm not sure. What do we have to do to get the buyers to be able to be successful in a purchase? But we'll talk with Guy about that today.
See, and that's really rough. If the prices are up and the rates are up, then that hits you right in your monthly payment. And then in Jackson County, at least, we have what we call the 3% creep because of the taxes going up every year. Yeah. So yeah, even just a 0.5% or a 1% change in the interest rate makes a big difference to a lot of folks.
Yeah, it does. And as we see, we're on the other hand, we're people who own homes are enjoying a rise in their value. Jackson County, double digits now for several months in a row. We can't sustain that. Rural properties, my goodness, they're so popular, and their value is rising even more. So, man, we just got so much to talk about today, Alice, with Guy. We'll see what we end up with at the end of the show.
So don't touch that dial. Pete Belcastro and Alice Lema will be right back from a word of our sponsor. We're very thankful to be sponsored by John L. Scott here in Southern Oregon, the Rogue Valley Association Realtors, and today, Guy Giles of Mutual of Omaha Mortgage. Do not touch that dial. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with my co-host, Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon, and we're welcoming back Guy Giles of Mutual of Omaha Mortgage, our in-house lender. Welcome back, Guy. How has your month been since last we spoke?
Well, it seems like it's changing every day. It was tons of purchases and then refis last year, and now back to purchases, and now we're starting to see a little bit of dip in rates again. So who knows where it goes from here?
Well, that's exciting. Can you talk a little bit about the rate dip? I think people are getting a little nervous. Some of them are closing higher than they expected.
It's been frustrating. We've been up a full percentage point since the election happened. Yeah, if you really look at where the rates were and where they are, as of about 2 days ago, it was up a full percentage point.
Wow.
It's backing off a little bit, but we're still nowhere close to where we were at the lowest part, but there's good stuff about that, because even with rates going up a little bit, the appreciation is outpacing anything you're going to pay extra in rate. So it's still, feels like a really good time to buy if you can get your offer accepted. I think that's the biggest struggle right now, even more than the rates a little bit. But
Guy, you're right. And I've now have people who've given up even looking for a while because the inventory is so low. And we've talked about that, months now, and there has been no change. Things come on the market and they go off the market, and multiple offers are happening. And it's even come. I've even experienced this week, which is really an odd thing, where basically the sellers decide, we had the buyers and the sellers decided there were multiple offers. the sellers went with like a local lender, saying that it was a little bit more stable than using somebody from out of the area lender. So that's how competitive this thing is becoming. And it seems like now it's coming down to what kind of a loan do you have? What's the rate? How is it going to be financed? And that's a big change. That's a big change I've noticed. Alice, have you seen that, or Guy, have you experienced any of that at all?
I see it all the time because I have real estate agents sending me business, and they're just like, they know I'm really competitive on my rates. And I actually have a funny story about that. Last week, I called my management because there was one of the online lenders that seemed so competitive that I was kind of like, I almost want to just tell them, go there, because I really do want the best deal. Somehow my management has access to things and found out that he looked up the loan officers working there, and 90% of them were college students. And the particular one that this guy was talking to was a waitress at Hooters 4 months ago. So who knows what you get when you get one of these, online lenders. So there's definitely an advantage to using somebody local. I kind of call it my canned soup theory, that if I see you at Costco and I've done a bad job, you're going to throw some can of soup at me or something. So, there's just a vested interest in our valley if you work here to do business local and, to close loans on time. If you're all the way across the country and you never have to look that person in the eye, you can just move on to the next one. If you have a little bit of a well or a septic issue, that, we're willing to be here local and work through with you.
Well, I've never been involved with such competitiveness for offers before. I mean, we had multiple offers, times of situations here and there, but this thing starts now because of the low inventory. It seems like it's starting down lower in the price range from $200,000-300,000, even up now to $400,000 and $500,000. That these kind of competitive situations are existing when a listing comes on the market, and so. Again, we want our viewers and listeners to be aware of what's going on out there. And if the competitiveness seems to have increased as time has gone on. Alice, am I crazy? What? Tell me.
Well, I just have a different experience. I'm working mostly Jackson, Josephine County, in a blue moon, Klamath County, but it seems like my buyers have more choices now. They do have to be ready to go. And so if, getting pre-approved from a lender like Guy Giles, or having cash and having all your documents ready within an email click away does make a difference. And I strongly urge all of the buyers, if you're getting financing, to really go with a local lender. It does make such a big difference. And unfortunately, and we talked about this last month with Guy Giles, that if you're a VA or a FHA buyer, if there's any way you can get qualified for the 5% or 3% conventional program, it can make the difference of getting the house or not getting the house. And I say unfortunately, because those government sponsored programs are amazing. And especially our veterans really deserve that. That's part of their benefit package. But with the market the way it is, if you can skinny up 3%, 5% and get into a conventional program, it'll make a big difference.
Yeah, even on the VA, if you don't have any Service Connect disability, the upfront fee for that is pretty high right now. So if you can get into something conventional, I mean, if you have Service Connect disability, the VA is still a great route. And for a lot of people with a lower FICO score, the FHA, but she's right. If you can get to a conventional loan, you're going to be better off in the long run than an FHA that carries that mortgage insurance for the life of the loan.
Unless you're doing a rehab. I found it very interesting that, when you have a tight market, you have houses that don't qualify, and all of a sudden, somebody has to do these lender required repairs, and there's not very many programs out there for rehab, but the FHA program is actually pretty good right now. That I found that surprising. And in a situation where a seller is only courting cash buyers and the offers are coming in too low for their liking, a rehabilitation program might be helpful.
Yeah, they've definitely come a long way in the last few years. I haven't dove into those things a bunch just because I try to stay within my wheelhouse. And there are people that are
and they're hard on everybody. They really are.
But there's definitely a time and a place for them. So, who knows, if you get into that one house that I mean, if apples to apples, you end up in the same shape when you're all done with a decent livable house, and you can beat out one of those cash buyers. It's not a bad thing.
Well, and also I see prices, people coming on the market this last week, and they're coming in lower. The prices are a little more reasonable. I'm not saying everybody. We still have a bunch of people out there in la la land, but in that under 400, under 300, Jackson, Josephine County, I'm seeing people coming in just a little more reasonable price when they go online, and I think that is another sign of possible stabilizing in our market.
I hope you're right, and it's not just a function of going in low, knowing that you're going to get so many offers on the place that that doesn't really matter where you start, just as long as you don't end so high that an appraisal won't work out.
I don't know. I don't know any sellers that want to start low. Do you? Pete, you want to weigh in on that?
I've had a couple recently that they've written offers on the thing, and I'm just kind of like, man, it feels low. And by the time everybody's done bidding, I don't know, it's a lot higher than what the asking price was. I'll have to show you guys something for the people. My dog lives on my desk now.
Yeah, there you go. So if I came to, hey Guy, if I came to you today with just tell people what kind of what rates did you give last week, that they have an idea, because we're hearing, you're reading the things that rates are going up. This is happening around stuff. So just tell us a little bit about what you did last week, and so we have an idea of where those rates are for people.
Well, I've been seeing a lot of people all the way up to 3.5% on conventional. I mean, obviously these are very, very FICO driven. I finally today, after a couple of days or actually last Wednesday, locked somebody in under 3% for the first time in weeks. So
how did you do that?
I'm talking conventional loans. The government stuff is a little bit lower than that, but I'm sorry?
How did you do that?
Well, it's just a click of the mouse for me.
So did they have like a really good score? Did they buy down the rate? What was the deal?
It was a good score. It was a good loan amount. There's about 26 things that go into quoting a rate. So, this was a deal where he had a decent FICO score. He has a decent down payment. Actually, lower down payments aren't really hurting you as much as they were in the past. It can actually almost help the rate in some cases. I know it sounds different than what I was just talking about, but literally you have that mortgage insurance that's behind it, that if you have a good credit score, it's not very expensive anymore. And that's just an extra layer of protection for the bank if you have that mortgage insurance. So they're getting actually kind of aggressive on the in-between rates, but not to go too far off on that rabbit trail. We're down closer to the 3.1% mark now. When I was getting, I was generally going up against people that were at about 3.5 a week ago or so, and I was coming in at about 3.25. So we have dropped off those a little bit. It's just the rest of the week, just it's gonna kind of tell everything. So I guess we'll see where it goes for here if we kind of continue the downward trend, which I think is going to happen at some point. And honestly, I expected it before now.
Downward trend of rates?
I have expected something to happen, for a dip in rates for a little while.
Because the economy is not as good as people think, or what?
Well, everybody, I mean, if everybody was supposedly cured today, that doesn't bring back all the jobs that were lost. That kind of thing takes time. And, there is risk of inflation. Obviously, we're printing money like never before. But at the same time, the fundamentals, as far as I'm concerned, for just an economy to come rushing back are not there right now. So that's just my opinion. There's people that have different opinions, and I guess we'll just kind of see. I mean, I don't know how you win. Either you get good rates or you get a good economy. I'd rather have a good economy, but I'm just thinking it's going to take a little bit more time to work through this than some people are thinking. I don't think that.
Guy, part of the problem that businesses have, and I've talked to so many in both sides of the hill here, and they just can't find workers. There's nobody out there. There's so much business to be done from remodelers to, landscapers, etc. Just enormous. Restaurants, we're experiencing that ourselves. we just can't find people to work, and it's slugging the economy because of that. And that's really a shame, because there's opportunities. Oh my goodness, there's so many opportunities out there right now for people who are motivated and want to take advantage of the situation. It's we may never see it again. We come out of this pandemic or in and out of it. And that's, I think, is still also causing us still not to have as many listings as we have experienced. Look, a year ago, Jackson County had 720 total listings. This last week, we had 259. East Medford, which generally would have 250 of its own, has 34 listings in all of East Medford. Well, and so you can see how the competitiveness is taking hold.
Yeah, hopefully as we move with the, whatever it's going to take to get going again, at some point it'll pencil out better to actually have a job than not have a job. So I think that's what we're kind of waiting for at this point.
On that note, I hope you're right. We have a break.
So do not touch that dial, folks. We have a very educational and entertaining conversation with Guy Giles, our in-house lender, Mutual of Omaha Mortgage, Pete Belcastro, Alice Lema. We'll be right back with a word from our sponsors. Do not go away. Well, welcome back, real estate fans, to the Real Estate Show. Alice Lema, Pete Belcastro, we're both brokers here at John L. Scott in Southern Oregon, chatting with Guy Giles of Mutual of Omaha Mortgage today. And Pete, you and I were talking a little bit about the break, about some of the local stats. Just when you think it can't get any stranger, what did you discover this week?
Well, we've had a very robust market. That has not changed. The demand, we're in a high demand, low inventory market. Jackson County is experiencing the available inventory, that is just literally gone. It's like being sold out. And so that's why it's so important for buyers to be ready and be prepared. Okay. So last week, Alice, in Jackson County, there were 63 closed sales. And the median price was $525,000. That's only maybe the second or third time I've seen it hit over that $500,000 in a week. But that's significant. That brings up affordability issues, et cetera, on down the line. Josephine County last week had 15 closed sales, which doesn't sound like many, but still, the average price was $445,000. Klamath County had 16 closed sales last week with the median price at $244,000. It's almost half of what Jackson County is right now. And so, those are all issues that are out there, and that affects rates. It affects how you get loans and how you prepare to be the buyer. And that's where, Guy comes in here to figure this out for us.
Yeah, I don't know if I have anything. Well, sorry, go ahead, Alice.
No, I was just going to say, the stats are residential stick built. Is that right, Pete?
Right. Yeah,
Jackson
but Alice,
County?
Even if you added manufactured homes to that total, you're only going to get 7 or 8 more listings. It's not only stick-built homes, it's manufactured homes. It's everything that is simply not out there. And again, the pandemic to me is playing a big role in here. People, as far as staying put until they can move about better. I think that's still the big driving factor in this thing. But if you look at Jackson County, this is what the market, what it is. And you say this to people, they're shocked. If you had 259 frame-built homes in Jackson County for sale last week, 149 of those are priced at $500,000 and above. So over half of that market is priced at $500,000 above, meaning only 100 homes in all of Jackson County are available for under $500,000. That, my friends, is incredibly 2 different markets. So Alice, you're saying you got a lot of people that have choice. They're in the higher bracket, right? I would assume.
No, I was speaking that my buyers in the brackets under 400, under 300 have really not had much to choose from at all lately. No. And then, they're starting to come on, in dribs and drabs, but at least they have some choices. We're definitely going out and looking at property in the last 7 or 8 days that's under that 400 and 300 mark.
And are you finding multiple offers if you put offers in at this time, or you're able to get them without that kind of a situation?
Well, it's really interesting because, and I contemplate this constantly, that a lot of these properties are not what the market considers move-in ready. And I think that move-in ready, quote unquote, has been redefined during the pandemic. And maybe Guy Giles can address this as well. But properties that are not updated with the colors, the grays, the whites, super clean, financeable, paint inside and out. People just don't want to. People don't want to write offers on them, so they're kind of languishing. And then there's price drops. And then we have a slew of estate sales, and these properties are not updated either because the estates didn't have the money or didn't want to put money into it. And so, yeah, so we're getting to go out and look at property, but they're not writing offers because they're not what I call Pinterest ready.
I haven't found really.
What do you think about that?
I really haven't found my people anymore. I mean, and actually, I've seen the transformation in the middle of the home buying process where they seem like they were a little bit pickier up front. Hey, I don't like this thing. It's a little bit outdated, or this bathtub's a little too small, or just weird little things. And now they're kind of like, hey, if it's got a roof and a front door, we're going to try to make an offer on this place. So I've seen a total shift. I actually got a call from the firefighter on Saturday asking me what a payment would be on a particular property. And then by Monday, I hadn't been asked for a pre-qualification letter. I checked with him and the real estate agent. When I finally got a hold of the buyer, he said he didn't even try to make an offer. There was already 10 offers in on the place, and he didn't even end up contacting his real estate agent. He's in the high threes. And so it's a crazy time.
That's the new fixer-upper price in town is like $290 to $320. That's the new fixer-upper price.
God, something's going to have to give. The CFPB has been coming out with daily bulletins. They're the kind of the people that oversee us, and they're talking to servicers right now, saying that they want to stop any foreclosures through the end of the year at this point. This is just some news that came out yesterday afternoon or this morning. So
how do you stop a foreclosure?
Well, you still don't have to make the payment. So if you don't have to make the payment, there'd be no reason to foreclose. So they're talking about October through December 1st now, where people don't have to. I guess lenders are not able to start the foreclosure process at all. There's about 3 million people right now. I was just trying to look at some statistics before I got here this morning, and this is only for primary residence people, by the way. So if you have investment properties and the government has said you don't have to make a payment, as a landlord, you're still going to be liable for this. So they will allow you to foreclose on investment properties. But as far as primary residents go, if you're not able to make your payment, they're saying 3 million people would have to start making payments. And well, anyway, we're coming up on like 1.7 million of them that'll be exiting forbearance in September. So there's on one hand a lot of people that are saying a whole lot of foreclosures will hit, that there'll be a good market for that. On the other hand, without any guidance on how the servicers are supposed to deal with these things, they're telling servicers that they better be prepared to help people through modifications. Again, they're not even giving guidance on how they want to help these people. But, and there was a lot of legitimate people that lost their jobs that did need some help and do need this. So don't get me wrong. I think the frustrating part is the people that still kept their jobs that just decided, hey, I don't want to make a payment anymore. You're not going to have to through the end of the year. I don't think that's formal yet, but that's what they're saying. And they're talking to all the servicers about coming up with viable options for people to work their way out.
So that sounds to me like if they drag it out, there's going to be short sales. It's going to be staged in phases over time. It's not going to hit all at once. And as you're talking, Guy, I'm confused because if somebody loses a job and can't make their payment, how can that be the case if Pete and I and you, our experience out in the world is there's not enough workers to fill jobs that we have. And we're just little old Southern Oregon. We're not even a big city. So that's kind of a contradiction. How is it people are not working?
Well, Again, just like everything that these guys do on these high levels, I mean, they don't think it through. I mean, honestly, if
Are you talking about the government?
yeah, I mean, if we were looking for logic, making mushrooms legal is probably not, the wisest decision, but something that somebody thought felt good at the moment. So,
well, and it does create jobs.
Yeah.
If you understand dirt, yeah.
Yeah, I guess that's true.
It's just farming.
I do feel for the people that truly, got into trouble during this whole thing and weren't able to work and weren't able to make their payments, but they're literally not talking about having people document why they got into forbearance or why they had to go into forbearance. Now, I don't know if when this whole stuff, just kind of gets all the way to the point where it's going to have to actually be addressed, other than we want you to deal with this and we don't want to tell you how. And what I mean by that is the CFPB telling the servicers, so meaning us or different places that Fannie Mae, Freddie Mac that hold these loans, that they have to come up with some kind of a workaround, but no guidance as to how or what. I would think that the most logical thing would be for them to just tack on those payments onto the end of the loan if you're going back to work. But if you've lost your job forever, we're just going to have to see where this thing goes. So two schools of thought. One is we'll see a whole lot of properties hit the market at some point, maybe early mid next year. The other one is that they come up with a bunch of workarounds and people are able to stay in their houses. But as landlords, I don't know, unless you have enough reserves, I don't know how you keep your house, because again, this isn't going to be addressing the landlord piece. If you, for investment properties,
well, yeah, then there's that whole mess.
Yeah, so it's a mess, and I don't know how quick we get out of it, but at the same time, apparently people still are making money. I have people coming in all the time that still have their jobs. They're still doing well. They're still really well qualified to buy a house. And it looks like they're still coming up with some solutions for first-time home buyers. One of them that I just kind of came across this week was where they're allowing, I have the contact information. If anybody needs this, they can get a hold of me. But if you've been renting for the last couple of years, where they can directly transfer your good rental history onto your credit report and get you an average of about 40% or 40 points on your FICO score. So say you don't have a ton of credit and you're just kind of getting started out. Veterans, I have this happen a lot with, where they don't just have that. Now, if you've been missing your mortgage payment, or your rent payment, is probably not a good solution for you. But for people that just don't have a lot of credit but have been making their rent payment on time, you can add that right in and get just a huge bump on your credit score. So maybe first-time home buyers, different people like that, I think it could help.
Alice, what about, and Guy, what about contingent offers? In a competitive market, if your house, again, sellers are going to look at that, and if your offer is contingent on a sale of your property, then it's not going to look very attractive. And so, are we seeing more? Is there more interest in trying to do that, Guy, where you don't have to sell your place? I can make my offer without it being contingent on my sale, because that seems to, I don't know what you guys. I come up against that all the time.
Yeah, I mean, I actually had that this morning, and thankfully the guy had enough in his 401k where he was able to just pull some money from that for the down payment, and he's not making his purchase contingent at all on the sale of his house. So he'll probably have it in escrow before we close, but it's not going to be necessary to do that. So I do try to talk to people about different workarounds on what we can do, to at least get you in the house. And the funny part is, one of the things that we've actually kind of used as a strategy also lately is people that are moving out of some of these houses that they've been in for years, maybe one that's out in the country a little bit, and you have some equipment and some other things that you need to address, making it to where you're giving them a little bit of extra time to get out of the house. And believe it or not, sometimes that's a more attractive offer than we got to be done with this thing in 30 days. So, I mean, it's just kind of case by case, but there are a ton of different options that we can look at to either write a non-contingent offer, or again, let them occupy the property for a little bit while they can move.
Well, and
Yeah.
we've got a break coming up. So do not touch that dial. Guy Giles, Mooch of Omaha Mortgage, Pete Belcastro, Alice Lema. We'll be right back. Well, welcome back to the Real Estate Show, folks. Alice Lema here with Pete Belcastro, both brokers at John L. Scott here in Southern Oregon. And we're talking to Guy Giles, Mooch of Omaha Mortgage today. He's one of our sponsors. We really appreciate you, Guy. Thank you. We're also sponsored by John L. Scott here in Southern Oregon, Ashland and Medford, and the Rogue Valley Association of Realtors. So shout out to all those folks. We appreciate you every week. So Pete, we've had kind of a topsy-turvy and unexpected shortage, trying to figure out how to deal with this. In your opinion, what would be the best way for a buyer to present an offer for a house when there's multiple offers? What would be your best advice right now?
Well, as Guy was saying before in the last segment, I find out if the sellers have any particular needs that they would like out of the deal. As Guy said before, occupy after closing for a while or whatever. And so I just try to come up with what situation I want. More than anything else, I want the seller to say yes to our offer. And so I try to sweeten it up. We've done everything from non-refundable earnest money. We've done everything from giving back. We will release the earnest money after we accept, after the inspections are done. So there are ways that you can actually do that. That can be done. So, but they're out there, and the thing is, there are just a lot more of them now. That's what I'm experiencing at all price levels, not just at certain ones, but it's a very competitive market out there, and you have to be ready. Even to the point, Alice, of you better have your pre-approval letter with you when you send it in, your proof of funds, if that's what it is, when you send in the offer originally, even the earnest money check receipt, because you're up against a lot there, and if it's all there, then it's easier for a seller to say yes to us. But you have to be creative sometimes with these things, and really finding out what the buyer needs is also one of the ways to do that. Hey, I wanted to say, because guys here, mortgage, the reason people buy houses is to create wealth for your family. One of the great reasons. We know we're getting more equity because prices are rising, but there's an Oregon legislature is up there having hearings. I believe they're this week or next week. They may have already had it, I'm not sure, regarding the elimination of the mortgage interest deduction from taxes in Oregon.
Can you believe that?
That would just destroy it. It would destroy the housing industry. And I hope, Guy, you too, you've seen all this time, that would just be a disaster. And I hope people are aware of this, that this legislature has got to get its act together and stop this, because we cannot allow that to happen, in my opinion.
Man, I honestly hadn't even heard, to be honest, that they were doing it. I kind of shut off the news last November, and it doesn't surprise me for a second. Government's just this sick machine at this point that just feeds more and more on whatever money it can get its hands on. But no, it would be devastating. I mean, I don't know if devastating is a word, but it's definitely one of the factors that go into deciding to buy a house. And sorry, that came as a little bit of a shock right there. But
well, this guy, every 2 years, this is attempted in the Oregon legislature. They've been doing it. I was back in when I was in the news business, they were doing this. Mm-hmm. It is generally beaten back, but every year they come in. Real estate is very easy to tax because it's a transaction. There's lots of money involved, and everybody wants their little piece of the pie. So just be aware of that. And if you do, if people are viewers and stuff, is to contact your legislatures. Jeff Golden, who's been on our show, Senator Golden. What's his stance on that? Things like that. But it would not be good for real estate if that happens, because they just want more money. As you say, Guy, it's easy money. And they see this.
Especially in Oregon, where we don't have a sales tax. So
yeah.
A certain percentage of the burden for financing our entire state is on the shoulders of the homeowners. And we don't begrudge social services and, our safety and roads and all that. But at the same time, it's like you can't keep going to the same pocket, because mathematically the pocket is going to be empty at some point. So yeah. So anybody listening want to email or call their legislature and Voice your
Well,
opinion regardless of what it is. Let them know how you feel.
And Golden is in one of those neighborhoods that's more of a moderate. It's not a far left leaning one. So I would hope that he would listen to. Well, there's homeowners on both sides of the aisle as far as that goes. They just have a super majority up there right now, and they're just kind of doing whatever they
Well, and
whatever they want
regardless
to
of your
do.
politics, nobody wants to spend more money than necessary. They don't want to
Absolutely.
compromise the level of life we have at this in the state. But yeah,
Well,
just as a homeowner, something to think about.
Guy, let me ask you another.
Actually, even if you're a renter, I think that you should contact Jeff Golden, because the landlords are not just going to pass this stuff on, or they are going to pass this stuff on to you. So it's not like you're immune from it, and it's just like, hey, we're just going to get away with this because they're just charging the property owners. I mean, all of that comes out of somewhere, and it's gonna come out in a raised rent, even as I don't know.
Oh yeah.
Landlording is a business.
Yeah, I know. So, Guy, have you seen much investor activity of all people buying buying properties for investments, or is that kind of tickled down during this time? Right.
I haven't seen a ton of that. I still see second homes. I still see people preparing to escape out of wherever they are at some point to here. So they'll buy a second home, because you can get basically not quite as low of a down payment as you could on a primary residence. You need about 10% down on a second home. But I am seeing a lot of people still buying second homes, again, just preparing down the road for retirement, getting in before things keep going up. From what I was reading from the FHFA this week, it was what, 12% nationwide that the housing went up. So we're looking at 1% a month. So there seems
But that's
to be
not sustainable either, right?
Not at all.
Right.
I mean,
why don't we get our show, Alice? Okay, in the latest SOMLS stats for December, January, and February, the Jackson County's equity or year change was up 14%. Okay, 14%. And in rural properties that we talk about as well, they've gone up 32% from a year ago in median prices. That is remarkable, while the inventory is down 61% still from a year ago. There you go.
Who could have thought?
But on the other hand, people who own property, they are gaining value. They're creating more wealth for their family. And that part is really exciting for so many people. It's where you're at, it's what you're doing in your life situation, how we talk about how these things affect you. So we'll see what happens here for the next month, Guy, with rates and inventory, Alice, and we'll see where it goes.
Absolutely. And if you have, if you're going to invest $60,000 in a $300,000 house, now you have $300,000 working for you rather than $60,000 in that account making nothing at all. So it's still a really good thing, even if there's not a lot of inventory. If you kind of take your time, and that right one will come along. It can be a little frustrating at first, but I always find that people end up in the right house in the end.
Yeah. So Guy Giles, Mutual of Omaha Mortgage, how do people get a hold of you if they want to chat more?
Well, you can call me at 541-944-6987, or just kind of Google me, and I should come up under Mutual of Omaha. And we're bringing back the Wild Kingdom for anybody that remembers that.
That'll have to be a different conversation.
Yeah.
Well, thank you, Guy Giles, Mutual of Omaha Mortgage, Pete Belcastro, Alice Lema from John L. Scott saying have a beautiful Southern Oregon weekend. We will talk to you next week. Bye now.